All right. What's up, traders? What's up, tycoons? Super excited for today's video. We're going to dive into Zoom, okay? Ticker symbol ZM. We're going to take a look at the daily chart structure. If this looks a little cluttered and hard to read for you guys, don't worry. We're going to break it down nice and simply by going over the inverse head and shoulders. We'll also take a look at the key Fibonacci levels, all right? And we'll take a look at the anchored VWAPs to show, really where momentum and direction is headed currently at the moment and where things could potentially head. What's really interesting to me is the open interest. Okay, Zoom is set up for a potential gamma squeeze. All right, now I've been trying to cover these gamma squeeze stocks, and we've seen many of them squeeze. And option chain activity really is something good to start paying attention to. So we're going to dive deeper into the open interest and really take a look at the strikes and expiration dates with a high amount of call option data. We're also going to dive into some of the fundamentals of the stock. All right, take a look at the price to sales ratio. It is currently undervalued by certain metrics, and all of those metrics are going to be done using today's sponsor, Simply Wall Street. It's a really great platform. Okay, they've got an amazing website and an app. If you're not a professional, okay, and you're not a pro at fundamental analysis, Simply Wall Street has their pros doing all of the hard work for you guys, and they make it very simple and easy to understand, as well as giving you guys some nice graphs and charts to help make it even more easy to understand and really visualize what it is that you're looking at. You can also email me for a one-on-one coaching session if you guys are ever interested at zachleytrades@gmail.com. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, we'll start off here on the Simply Wall Street platform, taking a look at Zoom and their stock overview. And currently it's trading at about 32.3% below the estimate of its fair values. Earnings are forecast to grow 39.27% per year, and analysts are in good agreement that the stock price will rise by 24.4%. Now, from a risk analysis standpoint, the profit margins are lower than last year, okay? And that does have something to do, and it has been reflected in the share price. If we take a look here, we can see that the shareholder returns in the past year are down 45%. Okay. Meanwhile, the software market, all right, is up 24.8%, and the US market is up about 13.8%. So Zoom has really been underperforming the US software industry and the US market as a whole. Okay. But as we take a look in this video, there could be potential for some upside. Okay. Now, when you look at volatility, Zoom is not significantly more volatile than the rest of US stocks over the past 3 months, and its weekly volatility has been stable over the past year. As you can see here, it's actually less volatile than the industry and average market volatility. Now, the price to sales ratio versus its fail ratio, Zoom is a good value based on its price to sales ratio of 4.5 times compared to the estimated fair price to sales ratio of 6 times. All right. If we dive a little bit further, we can take a look at the price to sales ratio versus its peers, and the peer average is at 11.2x. So Zoom is a good value based on its price to sales ratio of 4.5 times compared to the peer average of 11.1. And if you look at the share price versus its fair value, estimated using a discounted cash flow model, Zoom is trading below the estimate of its fair value of $98.90. So that's about a 31.8% undervalued at the moment. Now, again, all of this is done using that Simply Wall Street platform. And there's a link in the description or a pinned comment down below for a 14-day free trial, all right, and up to 40% off for the first 100 people to join. It's a really great platform. I wouldn't, take a bad sponsor and, shill something bad on you guys. You can also see here the analyst price targets, okay? And analysts actually have the average one-year price target at $83.29, which is about a 23.5% upside from here. Being that the current share price is at 67.45. So, the target price is more than 20% higher than the current share price, and analysts are within a statistically confident range of agreement. All right, so use that link in the description down below. All right, and get yourself a nice little discount. Check out the platform using that 14-day free trial. What I want you to do is not just look up Zoom and dive deeper into Zoom, but look up a stock that you've really been wanting to invest in. All right, even that 14-day free trial is going to be really worth it and really help you dive into some of the fundamentals of a stock. Now, this is the daily chart structure right here. All right, and it does look a little complex, but what I'm mainly focusing on is we are having an inverse head and shoulders potentially setting up here. Now, just because the pattern's forming doesn't mean it's confirmed. We really need to break through this neckline here. And if we do so, we have our bullish price targets up here ranging from $73 up to about $80. All right. Now, the key levels of support we need to hold are 67.62, 66.25, and 64.89. And we could potentially get that nice structure to the upside. Now, this is what it looks like, just the inverse headed shoulders. You can see we have a left shoulder here, we have a head, and we're in that right shoulder territory. So if we consolidate a little bit more through this range right here, in between this 64, really about $65 to $68 region, okay, then that's going to set up and really complete that right shoulder. And we'd be looking to break this neckline here to get that larger move up. Now, these are the daily Fibonacci levels. I kind of briefly went over them, but these are your Fibonacci retracement levels of support right here. And you use these to identify if something is in an uptrend or a downtrend and getting that trend continuation. And if you break through those levels, that's how you can spot a potential reversal, right? So we have some key areas down here of 62.08, 60.94, and 59.93. Those are extreme lows in the Zoom stock if you zoom out to the macro chart. But for now, if we end up breaking through 64.89, that's really going to be our last line in the sand. There's a very strong chance that we're going to come down and tag some of these price levels, if not potentially head lower. We do need to be cautious of our daily MACD right here, as it's trying to curl down below this yellow line. And that has been a sell signal many times on the chart, right? When you see the red line cross down below the yellow line, that's typically an exit signal followed by a preceding move to the downside. Same thing over here. We have a significant drop. So you do want to be cautious of that and pay close attention. If you start to see this MACD roll over, it could be a sign that we're going to break through those Fibonacci levels and potentially come down to here. Now, if we maintain above here and consolidate, right, that would lead to a little bit of bullish consolidation, some price absorption, and potentially hitting our bullish price targets to the upside. All right. Now, the first main level that we've really been tagging and haven't really been able to flip to support from resistance, you can see we broke out past it here. And we wicked above it a few times here on the daily, but we haven't been able to flip it to support from resistance. That's going to be 70.61. Then we have 73.08, 76.22, 77.86, and $80.22 are going to be the key levels that I'm paying attention to. Now, when you look at the anchored VWAPs, right, it's basically the volume weighted average price anchored to a specific date. So in yellow, we have the monthly, in white, we have the week, and in blue, we have the year. So you can see right now that we're trading below the yearly, the monthly, and the weekly. And so what this means is that your average shareholder from the past month, week, and year is going to be down on their position. But what we see here is that it's flat. The yearly is flat. The monthly is pretty flat. And the weekly does have a significant decline right here. Okay, but if we can get back above these, okay, and we start to see the yearly start to curl up and we start to see the monthly start to curl up and we're able to get above this weekly, those are going to be some key areas to pay attention to. All right, and some key signals that we could start potentially getting an uptrend, right? And this is going to be on a smaller time frame. We're looking at the 1 hour chart right now. So if you take a look, our weekly anchored VWAP is going to be right at about 68.70. Okay, then we have our monthly here right around 68.50, and then we have our yearly just below $68. So these are going to be important areas. All right, market makers, they tend to sell or buy at the volume weighted average price, and these are going to be some key areas you do want to pay attention to. Now let's dive into the gamma squeeze potential. So if we take a look right here, what we have is the option expiration date of June 30th, 2023, which at the time of this recording is 8 days away. And take a look, okay? This is showing you guys the open interest of calls and puts, all right, for that time. And look at this right here, okay? With the $78 strike, has an open interest of 20,523 contracts, okay? Meaning that, there's currently about 20,523 bets, okay, that the price will close at or above $78 by June 30th. Now, a gamma squeeze, to simply put, is when market makers are forced to hedge themselves, because if 20,000 people want to execute these option contracts and they're in the money, there may not be enough liquidity, or there may not be enough sellers, right, that are willing to sell those shares. Because you have to remember, each option contract is for 100 shares. So that's about 200,000 shares right there, potentially, that market makers would be forced to hedge and buy in case option contract holders want to execute those contracts, right? And this is something that, you'll see some quick spikes in the price of a stock once you're around that strike price. So if we get to $78 before June 30th and we're able to hold above that level, sorry, that's going to be really interesting to see. Okay. And there is potential for a gamma squeeze. All right. Now look at this in total, right? The total open interest is 29,559. That's across all strikes for the June 30th, 2023. And that's for calls and puts. And we're seeing that 20,000 of it is specifically on one strike, and it's on the call strike. So that is really, really interesting and really caught my attention when I started looking at Zoom today. I was really looking here at this open interest, and it really caught my eye. Then I went out a little bit further to July 21st expiration, which is about 21 days from now, or I'm sorry, 29 days from now, and take a look at what we see here. We see a large amount at the $70 strike, a large amount at the $75 strike, and an even larger amount here at the $80 strike. So the call open interest total is at about 58,000 versus the put open interest total is at about 14,000, with the largest concentration of puts here at the $60 strike price. Okay, so it's going to be really interesting to see what happens. Remember, 78 is the really high open interest for that next week option expiration, but July 21st, it's right here at $80. So, if we get above 75, we could start seeing that gamma squeeze here. And then if we do that before next week option expiration, and we start to drive up towards that $78 price, we could see the gamma squeeze push it up to 80. And if we get up to 80, we could see another gamma squeeze here at the $80 strike price. So there is lots of potential in this play. All right. And if we go over the price targets, let's take a look back at our chart real quick. Okay. And we'll go ahead and take a look at our targets right here for our chart. And we can see that $80 is actually the price target of our inverse head and shoulders right here. Okay. That's going to be the 1.618 Fibonacci extension. And, we have $78, which is going to be right around here. We have $75, 75, 78, and 80. This is all right where that high open interest is on the call options, right? So if we are able to break through this neckline and head up to these prices, we could really accelerate up to that $80 potentially, and maybe even hit our previous highs here right around the $86 price range, all within July 21st of 2023. Now, there's no guarantees that's going to happen, but these are some of the things that you want to look out for and pay attention to, as these present good trading opportunities when you can spot, technical analysis setups, and then you can also use the option chain data to go ahead and look for some potential gamma squeezes, right? So I just wanted to cover all of that in today's video. As always, you guys can always email me for a one-on-one Zoom coaching session at zachleytrades@gmail.com. We can work on setting up a time that works for you and that works for me. And we can go over, a specific stock if you want to go over some key levels, or maybe you guys are interested in more of just learning, some of the different strategies that I use, or learning how to use some of the different indicators that I use as well. So appreciate y'all watching. Smash that like button, subscribe to the channel for more, and don't forget to check out Simply Wall Street with that link in the description or pinned comment.